Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Today actually, as you understand, we just can't ignore the situation that we have on the euro currency. So we briefly have talked about it recently, but not directly on the euro currency, on the dollar index, but actually dollar index has the mirror picture to euro currency and approximately the same targets we could discuss on the euro currency as well. So in today's weekly research, guys, we have put the interesting fundamental part. There's new research on dedicated to European Central Bank policy from the FETM Consulting. So they have made the forecast on expectation on the European Central Bank rate change, how the new inputs of the quantitative easing program will impact on euro currency. But in general, just taking 2 plus 2, we could suggest that's definitely will be not really good times for euro currency in the coming year, because it's not really some riddle that when the European Central Bank announced the prolongation of the quantitative easing program through the whole 2018 till the September, it's 9 months longer than it previously was expected, but partially has reduced the amount of the bond purchasing, but still, this is the dovish result of the meeting, and just taking it together with coming more aggressive Fed Reserve policy, because by the opinion of the FETM Consulting, again, they think that investors mostly underestimate the strength of the Fed Reserve policy on the coming year. So slightly great expectation should be to rate increase compared to what we have by the Fed Watch. You know this tool from the Chicago Mercantile Exchange, so they put on the site so-called the Fed Watch, where they show the probability by the Fed fund rate, the probability of the rate increase, that assessment by the market. Well, and FETM Consulting think that it's a bit underestimation, and this gives even more pressure on the euro currency in the coming year. Speaking on the technical part of this event, by taking a look at the key markets, the long charts such as gold market, 10-year bonds, United States Treasuries, dollar index, in all charts we see reversal formations are forming that suggest the strength of the United States dollar. Even here on euro currency, if you will take a look at the monthly chart, you will see that indeed there is some action should happen that also suggests, if not reaction right to the parity, but really deep drop on the euro currency that could take the long part of the 2018. So, and I think that you could read them. Maybe it makes sense to read the weekly part, fundamental part of the research today, just to get understanding of the whole complex of the inputs that we have right now around the euro and around the financial markets as well. Speaking on the short-term perspective, guys, finally our riddle has been resolved for the direction, because indeed, as we have discussed in the previous videos, this market was forming some contradictory patterns, and till the last moment it was unclear what direction market will take. But right now, as you can see, this drop has happened, and on the daily chart we will be watching some two major tools. First important tool, it's maybe will be important not for a coming week, but within the couple weeks maybe. But the major tool here is target of the hand shoulders pattern, and it's based on this ABC top. The first destination point will be at 1450. Next one will be 112, but this 112 is not very important. It stands too far. More important for us is 1450, but we will discuss it a bit later. because in the beginning of the next week, we mostly will be watching what will happen around this area. It's 116, guys. As you can see here, it's just a confidence support. But in reality, the importance of the 116 mostly stands on the monthly chart, because this is the border of the sideways consolidation or rectangle consolidation that has been broken here up, and right now market is returning back to it. So I could show you on the monthly chart. Here, as you can see, this is the border of this consolidation. Also, you can see here this previous top standing. That's why on the daily chart, the 116 is not just a confluence. Also, of course, market is oversold here. So by this drop, it's definitely oversold. So here we have significant support area. It's accompanied by the daily oversold confidence support. That's why it's logical to expect some minor bounce on the common week. But at the same time, market hasn't achieved yet the major target, is for 114.50, and market just has broken through the neckline. That's why, to get clear and valid overall the situation around the hand shoulders, we do not want to see the big retracement, and we do not want to see the return back above the neckline. So just occasionally it could be pierced by some shadow, minor fluctuation around it, but mostly market should stand below this area. On the 4-hour time frame chart, guys, market's forming also as a part of the right shoulder. As you can see, this is a butterfly. Well, actually, it's not. It doesn't have the clear butterfly shape, so it's maybe not quite correct to treat it as a butterfly. But I just have drawn it in this manner because what is really important for us is this extension of the right shoulder. This 1618 extension stands at the 115.35, 115.40 approximately. Taking in consideration this collapse that we've got on Thursday and Friday, it seems that market really could continue first with the 161 extension before some retracement will start. Potential target of this retracement, guys, as soon as it will start, we could see on the hourly chart. I would watching for 116.75 by the 3 reasons. First of all, this is the fib level. If market will drop to the 1540, this will be probably not the 3.8, but maybe this will be 50% resistance. But anyway, here will be probably the fib level. Also, this will be weekly pivot point. And finally, what's more important for us, this dot line is actually the neckline of the head and shoulders pattern. As you can see, sorry, I have adjusted slightly. So that's why these areas will be very important. This will be potential target of the retracement. After that, I think that market should continue move down to the major target on the daily chart, to the 1450. Whether this will happen on the next week, I don't know. Maybe non-farm payrolls release on Friday could accelerate this process. Maybe this action will take a bit more time, but market probably should reach 114.50 area after retracement will happen. Why this level is very important? This level, guys, important by 2 reasons. First of all, if you will read our weekly research, you will see from the analysis of the weekly chart, this is very strong weekly support. But what's more important, that market actually stands here in a long upside trend. It lasts for almost for a year. So it started in December 2016, and the whole year market stands in upward direction. So the upside momentum here, if you'll take a look even at the speculative positions by the CFTC report, stands rather strong. And market needs to fade out this momentum. That's why my suggestion is that as soon as market will hit this rock hard support on the weekly chart, deep retracement should follow. So it will be probably the 618.50% on this whole downward action. As soon as this A, B equals CD will be completed, this market here could show the deep retracement maybe even to the 1850 again, somewhere in the 618 resistance of this action. That's typical process for reversal of the market. And after that, the major collapse should follow. That will probably could happen already in the end of the 2017, maybe after the December Fed meeting. On the comments of the Fed meeting, this could happen, and last through the 2018 on the cycle of the rate increase by the Fed Reserve. So that's the major suggestion. So first here, we should get some minor retracement. After that, continuation to the 1450. After that, somewhere in 14 area, 1450, should be some deep retracement. And after that, following the situation that we have right now, based on the fundamental factors, we could expect the long-lasting downward action on the euro currency. So approximately, we could treat the current situation in this manner.